I'm really excited about the panel that we're going to be talking about today, which is crypto. Who will regulate you after all? And hopefully it is someone that we trust and enjoy working with. Before I do go there, though, I'd like for Nicole to make us an introduction for you, the panelists, because I sometimes, in my enthusiasm, do not do a very good job of covering all the bases. So, so Nicole, why don't you take away introductions?
So Carolyn Bauer is the CEO of BTC Markets, one of the largest digital asset exchanges in Australia. She has worked in the financial services since 2004, both in Europe and Asia Pacific, including investment banks, hedge funds, financial technology companies, and financial advisors. And this has extended to blockchain and digital asset companies since 2015. She is the 2022 recipient of the Female FinTech Leader of the Year Award from FinTech Australia. So congratulations for that. Then we have Amy Rose. She is the head of operations at Blockchain Australia. She has a unique breadth of experience gained across diverse sectors, including medtech, telecommunications, construction, education, blockchain, and digital currencies. Amy Rose is recognized for her leadership, agility, passion for technology, and experience managing broad, complex stakeholders, ranging from startups to corporations and government bodies. And last but definitely not least, we have Victor Jiang. He is known as a serial entrepreneur. He has worked with many of the Fortune 50 and countless startups across 12 countries. He currently sits on the board of 8 tech companies across Australia, the US, and China. And in 2015, he founded Sapien Ventures, which is a technology-focused venture capital fund. He is president of Red Sea Forum Australia, and he's an investor in such blockchain companies as Civic Ledger. So we are very lucky to have the three of you, and we are excited to hear your thoughts on all things regarding crypto regulation.
Thank you, Nicole. I mentioned, Victor, I did not share any news. You're welcome to do that in your relationship with Link2 and your recent appointment, but that's entirely up to you. So, not that I let the cat out of the bag, but here we are.
Well, now that it is, well, I'm very pleased and honored to share that I have recently been invited to join the board of Link2 Inc., and which I gladly accepted. Sapien is also a investor, in fact, a lead investor of the 2018 Series A round of Link2, and we've been very excited about the company's progression and some tremendous progression it has been since. Yeah, recently to have this great opportunity to join what can I only say as an illustrious board. So very honored to have the opportunity and continuing the journey with folks.
Thank you, Victor. It's a pleasure to have you, and you'll assist us with that whole APAC region, which we're looking forward to, as well as your leadership and thoughtfulness and the way we do things is much appreciated. Thank you. Hey, Rose, it's Goodey. This is the first time we're meeting you here today, and Caroline Bauer, we're familiar with you. The last time we met was, she said to us, she said, watch out for a bunch of press releases and news releases for the next year, and we didn't pay attention to her. But we saw a news release every week from the time that she announced that, which was way back in last year. So congratulations to all of your success and your continued growth, Caroline. And I'm so happy you agreed to be here today. So Victor, I know that you have had a conversation, and we did briefly with Amy and Caroline, and we're letting you, we look forward to your leadership in this moderation of this particular topic. We've covered a lot today, yesterday, and today. We've talked about regulations, we've talked about blockchain, we've talked about Sam, our dear buddy Sam, and what that fallout has had and what that is meaning to the regulators and what they're doing, whether they're stepping on the gas or pumping the brakes. We don't quite know. It seems like they're being both-footed. But we've talked to some folks from New Zealand, ANZ, Digital Bank, and ZeroCap. Yesterday, they were here with us, and and Nigel from the ASX was here as well. So he gave us some ideas of tokenization, securitization, regulation, on what's going on there. I did mention that you guys were going to be here today, and hopefully they're on the panel or will join shortly. But thank you all for being here. I'll let you take it away, Victor.
Okay, thanks. It's great to see some familiar faces and some new faces as well. Caroline, great to see you again. Amy, really good to meet on this awesome occasion. Certainly have done some works with Blockchain Australia in the past and as a fellow. There's some really exciting things happening in blockchain in Australia and also I would say regionally. For example, today I'm actually joining everyone from beautiful Hanoi in Vietnam. And there's some very exciting things happening in the blockchain space, including on the regulatory front in Southeast Asia. But before we go there, I think it's probably worthwhile to just address the elephant in the room in terms of repercussions and ripple-on effects from recent debacle at FTX and what this means, perhaps from a regional perspective, starting with Australia and New Zealand. So, I mean, Caroline, Amy, what are your overarching thoughts or comments about immediate to medium-term repercussions on this from a regional perspective?
Yeah, I'll probably jump in here first, and thanks so much for having me back. It's been a while, so really glad to be here.
Thank you for joining us.
So I think with FTX locally, I think the first thought goes to the 30,000 or so Australian investors who were caught up in the collapse of FTX Australia. And by all accounts, from what we can understand from the local auditors who stepped in, it appears as though everybody who was involved in FTX Australia likewise was probably caught unawares by what's happened, although that's to be confirmed, but that certainly seems to be the view. I suspect that the fallout locally will be relatively contained in the sense it will be those investors, but the knock-on effect will be felt across all of the industry. I think like all the other markets, we've taken a knock in terms of liquidity being traded or volume being traded on the exchange. We saw the spike at the collapse of FTX, and now it's gone back to where it was perhaps in October. Those kind of numbers there are back in play. So we're back to the calmer seas but quieter market. And what we're going to see instead, I suspect, will be the stepping up of regulators here locally. That was a conversation that was already live, that was really ongoing in the market in Australia, both at the government level. We did change of government. The incoming government picked up the baton that was being passed across when it came to regulation, and the local regulator here, ASIC, could certainly have been stepping at the heels of plenty in the industry around the business and how they operate. What we're concerned about at B2C markets is more about making sure that we don't throw the baby out with the bathwater when it comes to regulation of this asset class. What happened with the FTX was a failure of human behavior. It wasn't a failure of cryptocurrency. And I think that that's an important point that we keep on coming back to time and time again. That when it comes to regulation, the issue, in fact, the local issue here for FTX Australian investors is that because of the fact that this business had to be executed overseas, means that the regulatory law, the laws that are now applicable are those from outside of Australia. So even though there was about $40 million left in the FTX Australian accounts, because of the fact that FTX International have superseded them in the creditors list, means that that money is likely to go overseas anyway. But our point with that is that if we create such a prohibitive regulatory regime that forces Australian crypto investors to go overseas, we don't de-risk, we escalate the risk by not providing an onshore option, a safe, secure onshore option that's appropriately regulated around the human behavior element. And it's a missed opportunity, but it doesn't get rid of the risk, it doesn't de-risk the situation. If anything, it escalates the situation, the risk around the situation by forcing it overseas. policies. Hopefully we won't have to teach, you know, or relearn that lesson time and again here in Australia. Hopefully this one experience will be sufficient for us to put together some proper regulation. We know Europe, that's coming into effect in 2024. We really have to pick up the pace with the work that we're doing with it locally here to meet that. So in the shorter term, the fallout has been obviously dreadful for those 30,000 investors. We've seen the widespread kind of contagion through the rest of the market, but over the longer term, it's really going to force the hand and move the dial on regulation, will be my view. Amy, I'd be interested to hear your perspective.
Yeah, thanks, Caroline. I guess as a follow-on to that, I do have concerns. I have to give the government here and our regulators credit. From 2011 all the way up until now, there has been regular consultation with industry. It's been a slow process, but we've still come out to where we are now. My concern really is that with the fallout of FTX, there is a need for speed. And when there's need for speed, there are oversights and there might be gaping holes. And particularly for our new businesses coming in, our startups previously, without that regulatory, those boundaries, they were hesitant to move forward. So I speak with a lot of startups in our industry, and a lot of them put the brakes on, they paused because they knew that regulation was coming. But there was the anticipation prior to the FTX fallout that it would be regulation that was fit for purpose. Now, as I said, I am quite concerned about the speed, particularly with all the different regulatory bodies coming in and letting us know, in a couple of meetings last week in particular, that everyone will be coming through in 2023 and requesting consultation. So there will be the need for resources from Blockchain Australia. The industry will need to come together. And we'll need to rally the troops in order to address every single little nuanced component of regulation. So FTX, I think there are silver linings. We will have regulation afoot quite soon, but we have to manage it in a proactive way and address the needs of the industry quite specifically.
And Amy, would you be able to shed some more light on, at least from your personal or Blockchain Australia's perspective, what sort of regulation, if it needs to be coming in and coming fast, what ideally should that look like?
Well, as I said, it needs to be fit for purpose. We need to make sure that it's not so restrictive that that we are forced offshore, like Caroline says, that we're not restricted so much to the point where there is no innovation. Innovation brings investors, innovation brings jobs, and our industry thrives, and so does our economy in Australia. So if we focus on that fit for purpose component, then we will ensure that the future of the industry will flourish.
Yeah, and in terms of regulation is one thing, and I'll come back to that a little bit more, perhaps from a wider pan Asia Pacific or Southeast Asian perspective. I want to come back to you both a bit later on that. In terms of what the industry can do itself, I mean, I do strongly resonate with what Caroline said earlier in terms of, you know, the FTX debacle was not really not a failure of technology or innovation. It was more about just failure in human control and governance and supervision and so on. So, you know, in financial services, there have been these well-practiced concepts such as third-party custodianship, third-party trusteeship, and so on. Do you think that should become more prevalent, both in Australia and regionally or even globally? Because that seems like that was a missing element even in FTX, for example. Yeah, what are your thoughts?
Yeah, I can jump into that one, Amy. Amy Rosewood. So our view is that, my view rather, I should be more specific. My view is that there was a lot of the commentary that came out from people in the industry at the time of the FTX when it first broke was that not your key is not your coin, and that you left crypto on exchange, and so what did you expect? And that you've been warned, you've been told, and you didn't take it off exchange. I think that is a very exclusionary viewpoint to take. There are lots of people who, for various reasons, don't want to take their crypto off the platform. They're comfortable leaving it in an institution that they trust. And that's very indicative, I think, of the broader view here in Australia, which is one of trust. There is an incredible amount of trust in our financial institutions locally. So they had trust in their crypto exchanges likewise. Also, using the ledgers can be complicated. Remembering seed phrases, all of that, it can be quite complicated. And for some people, it's just more than their heads are willing to get around. So saying to people you either take it into self-custody or it's your own fault is not the right answer. And I would agree with your view there, Victor, that the missing piece here could be third-party custodians. That's something that's used in digital finance for different reasons in terms of settlements and how the settlements work. But it's incredibly valid that their single role is about making sure that your assets are kept safe so that you have a trusted third party that's looking after it for you. And it would be a relationship where they obviously don't have the capability of trading. They can't make the use of client assets, exactly what you'd expect from, I don't know, if you had your shares with Computershare, for example. And that's the kind of model that we would anticipate would come through. The issue there is probably more on a technical point of view, that we'll, from a technology connection between exchanges and custodians. We connected up with BitGo a short time ago, and that took us a while to get our technology right because of the sheer security concerns that you have around it. But that's something that any well-resourced crypto exchange platform should be able to navigate. And if they can't, then they need to find a company that can help them to do so, because that's really, really important to have the technical chops to do that. So from our point of view, it creates the optionality then for people that they can either take it on themselves, put it into their own ledger, which is fantastic, or they can leave it in on a third-party custodian setup. But there would have to be also the acceptance that there will need to be a cost element to that custodial relationship. Currently, there is no real cost element to these custody stations because of the nature of how the business has grown here in Australia. That will not be able to remain as it was. But I think this industry has grown in fits and bursts between the bulls and the bears, and I imagine we're going to see more of that professionalism come through and moving more to that model. There's nothing wrong with that model. I know there's a lot of talk about centralization, and it goes against the spirit of it. But this is actually about the use cases. This is actually the day-to-day reality of how people engage with crypto. And sometimes it takes us a while to get to a fully decentralized environment, would be my thought. Amy Rose, what's your view?
I think when you go to an exchange and you know that you're buying from an exchange, the education is out there to tell you not to leave your crypto on an exchange, not your keys, not your crypto. And that's nothing new. So I think, and look, there is a bunch of regulation coming in on the custody component. My concern is, and I'm not quite sure about this, Caroline, maybe you can tell me as the CEO of BTC Markets, what are the consequences for you? Because what I'm seeing is we're looking at more regulation for our crypto exchanges, and the smaller exchanges are essentially probably not going to be able to meet those new requirements, cost reasons, and also just licensing and multiple licenses. I think that it's a great move forward, and it's forced everyone to take their crypto off the exchange and own their own assets. But I also know that there will be a select, your exchange is larger. There will be only a few exchanges who will be able to meet those new requirements. Great requirements, I think, are coming. But I think the competition and the smaller and those small exchanges, the innovators, will probably be forced out of the industry.
I suspect that
on that point, do you think, because ASIC and APRA has been actually the two major regulators in banking and finance here in Australia have been actually experimenting with restricted depository taking institutions. So basically restricted banking licenses in a sort of a sandbox environment for smaller operators. If it looks like third-party custodianship could be coming in, and personally I resonate with both of your comments that it's probably a good thing to happen for the industry. Do you think that it could be viable, and would it be good for consumers, for markets, to have a sort of tiered approach towards custody requirements. So if you're operating a small scale sandbox, you have a more restricted authorization, but within that, the compliance requirements or costs are not as great as if you're running a full-fledged bank, full commercial, or in the case of, I somewhat see comparables between a crypto exchange and a stock exchange. Well, there is an argument that not everyone should be able to operate a stock exchange, right? If you don't have adequate resources, infrastructure, and experience, you probably shouldn't. But could a step incremental approach be palatable to market and good for consumers? Caroline?
Yeah, I think that the idea of a tiered approach is going to be supportive of local industry from looking at it from a custodial point of view. There's also a learning curve on the custodial side. The big players in traditional custody don't know much about crypto or blockchain. I think that's fair to say. It's not, but it hasn't been their technology.
Opportunity for them, maybe.
Well, I mean, I hope to get, I hope that they come out and pull the dust covers off their fully formed crypto custody solution. But I certainly haven't spoken to anybody from traditional finance who have that platform. They haven't come knocking on our door. And so there will be a lag, a time while the custody industry itself gets up to speed with the opportunity. So there probably wouldn't hurt to have a staggered approach across both sides. I also agree with your point too, that if the platform hasn't got the wherewithal to properly fund and look after the business, look after assets, then they have to perhaps look at some diversification themselves in what they're doing, because and this is purely from a risk management point of view. And I mean, it's something that for us as a business that we have to look at. We're certainly planning for the inevitable license requirements and the cap requirements that are going to come through it. That's very much at the forefront of a lot of our thinking at the moment. But also keep in mind that, to the point that Amy Rose was making about the not your keys, not your coin, like there's still that drumbeat, and there's still going to be a substantial number of people who are going to be using it, taking it off platform entirely, and or moving into decentralized finance, which removes the third party completely. But that's, in my view, the DeFi world has still got some distance to go. There is a lot of work before that becomes meaningful and significant. It's happening, but there's still a distance to go, particularly sitting here now from a centralized exchange point of view, looking only at what only now is coming through to us. I think it's going to take longer to distill down into the decentralized finance world. But obviously it's still hugely exciting as an opportunity.
Yeah, Amy?
I guess on the custody side and the opportunities afoot, I've just been doing a lot of engagement recently with our regulators, and I don't think that the decentralized or the DeFi is going to be the best alternative, and also with investment going overseas and consumers going overseas. I think that when it is removed from, I guess, and I don't like the word control, but when we're removed from our own regulatory environment, there is more risk to consumers. And at the moment, all regulation is about consumer protection, right? So everything that's afoot in 2023, it's all focused on the consumers. So if we can do our best to keep our crypto investors safe in Australia, I think we need to do our best to make that happen. The regulation that's coming, if people move out of the country, it's going to have a detrimental effect. So, and like Caroline said, there's a lot of work to be done on DeFi, and I don't want to poo-poo decentralized exchanges or anything like that, because I'll probably get a few emails after this call, but I do want to impress that we're doing a balancing act at the moment. We could go either way, and this is a really critical moment.
Rather than just and taking perhaps a different slightly different tack, rather than just talking about what we perhaps wish to happen, what do you think will happen in the next 12 months in Australia, and let's say New Zealand as well, if we can tag that region along, in terms of custody, in terms of regulation, in terms of centralization, onshore versus offshore, what do you predict will happen, whether you like it or not? Maybe we'll start with you, Amy.
No, I can't do the truth moment. I'm just before this call was the manifesting and the affirmations. So now I'm mindful not to speak out of what I feel. It's what I hope will happen.
Maybe
is
you're
like
more in the know than the rest of us.
I do have concerns at that need for speed. I think we run a huge risk of over regulating and just trying to get it done, nipping it in the bud. The previous government, their approach, it was going okay. They had some really good ideas about the future of regulating the industry. The focus on consumer protection, as much as we need it, there's not a lot of focus on the other aspects, like our businesses and our innovators and the future in that capacity. So I think what might happen is we might have a little too much red tape, and we might not be able to welcome in our startups and our businesses who are already trying to get off the ground at the moment without that regulatory environment in place. They might not make it. And that's a concern of mine, because I've had such hope in the industry up until, I have such hope in the industry. I have to be very careful with my words.
Caroline, any
Yeah, thanks for passing the grenade. Yeah, appreciate that one. Look, I would agree. I think that that it's the really, really hard work for the next 6 months, and it really, the time frame probably is as tight as that, if not tighter, is to impress upon the point that what needs to be regulated appropriately and proportionally are the risks posed by humans interacting with the technology. I look at the European model that they have put forward, which outlines from the outset that this is a risk-based approach. There are some risks that are mitigated by using blockchain technology that outweigh what exists in traditional finance. So the onerous burdens should not be to the same degree. I have been on the record for years saying, please regulate me, I need to be regulated. That the investors in BTC markets, those people who use our platform, are just relying on my integrity, which is robust, unquestionably, but that's what they're relying on. And that should not be the case for people. And there is
you guys are doing some proactive things to improve transparency and integrity, right? I mean, some of the initiatives I learned earlier about what you guys are doing, bit of a role model, if I may say so, for the industry in terms of greater transparency, and perhaps the industry need a bit more of a role model to set an example to proactively go for audits and maybe third-party custodianship and licensing, even if at the moment you don't need it. It's
I don't need it for
commercial practice to set yourself up, but also, you know, I would say it's probably a good marketing point.
Well, yeah, it was. We didn't do it for those reasons. I mean, to your point, I'm not required from a regulatory point of view, but I am required from a good practice. A well-run business does this, and brings in those practices from other sectors that apply to their business. And the reason we did it was exactly that. It was a purpose of building something that was robust enough to withstand what we're currently underway. And we will come out the other side of it. We've got enough cash reserves. Our technology is fine. If anything, we've been a net benefactor from what happened with FTX, because we've seen a return of clients coming back on platform, and actually a month-on-month doubling in the number of new clients coming on board. So we've seen a positive net effect, which, you know, again, is something that we probably would be kind of bragging about, because we understand that some people are really badly hurt off, but instead people are now looking at our business model and going, look at that, they've done everything that we assumed is happening elsewhere, but we've been it's not quietly doing it, but I think nobody wants to talk about risk management when you're in the middle of a bull run. It's not as exciting a topic as, you know, watching the price of volatility in the markets, but that's what
Until you start losing a lot of money.
Yeah.
Well, the way I go into business, Victor, is like I do with most things, with most contracts, is that I think about the divorce, not the wedding. That's what I'm thinking about, is that when things go wrong, what's going to happen next? That's how we negotiate on all points, is when the divorce happens. And so for us, from a risk management point of view, that's what we've been doing. Not very sexy, not very exciting, but so essential when the wheels fall off. So to the point then about what could happen, that's exactly the point, that I think that it needs to be about regulating on the human behavior, regulating on you know, those aspects and qualities that are not restricted to just crypto. There's a reason why traditional finance had segregation of client assets long before crypto was even a twinkle in Satoshi's eye. It's specifically because this human behavior is a tale as old as time. And so absolutely put in place that, but don't start thinking that they can have a pop at Bitcoin or have a go at Ethereum. Don't try and suffocate the industry here locally by layering that on top of it. We all know how exciting the promise is of what we're looking at, and we're just on the cusp. And I think back to being that, I'm sure I spoke before about being that undergrad student who managed to get swipe card access into the postgrad computer lab and looking at the wonders of what was the early prototypes of Skype, being able to communicate through video transfer across from one room to another. Mind-blowing back in the late 90s, mind-blowing. And I kind of feel so many times in blockchain, and that's where we are with so many different programs. It's still at that, gosh, we don't even know how exciting this is all going to be and how transformative it's all going to be. So that stays true. And I just don't want us to suffer the burden of suffocating regulation as a result.
Yeah, I think that's very, very well put and succinctly put. Finally, before we go, I just wanted to ask very quickly, in terms of given your backgrounds, what do you see in terms of regional shifts vis-a-vis Singapore, for example, both regulatory and industry movements following recent events? Is there anything you could comment on, you know, is that what's happening in Singapore and around Southeast Asia relative to Australia on the regulatory front?
Amy Rose, do you want to take this one, or will I go?
No, you can take this one.
Very good. Yeah, so Singapore to me is really exciting, and it was my first time back there in a number of years, just for the FinTech Festival a couple of weeks back. Oh God, it was so good, and the energy that place manages.
Quite a crowd, right? I heard.
Oh, so good, really good, and it felt like that they'd positioned it almost like a homecoming, because people haven't been able to be there in person for so long, that it was like reconnecting back with everybody, and that certainly was the case. I really enjoyed it. What I find, and have always found with MAS and the Singapore government approach, is that they are very pragmatic. They take a point of view that's longer in time than most other countries when they look at crafting their regulation around finance in particular. They are fundamentally at its core about protecting its Singapore citizens, but likewise around protecting Singapore business. They are very, very astute in how they do that. They're very awake to the possibilities and opportunities while also protecting Singaporeans. Their view on crypto trading, they are not fans. They've been clear on that. They don't think it's suitable for retail investment. They've been clear on their views there. But they haven't also likewise then taken a jackhammer to the industry. They've been relatively supportive in how they've built up their regulation around it. And certainly even with the projects that they work with, I know JP Morgan announced that actually that week of the FinTech Festival, their own interactions with decentralized finance using the Singapore dollar. So they are experimenting, they are involved in it. They've also got numerous different projects around CBDCs, the use of NFTs and payments, like they are exploring it. So their regulatory framework kind of reflects back some of those attitudes and points of view. Australia has been keeping pace to a degree with CBDCs in particular. They've also been working actually with the Bank of International Settlements, MAS, the Malaysian Central Bank, and the South African Central Bank around wholesale use of CBDCs, which is really exciting. We know that there's been a very, very popular response to the retail CBDC pilot that they're looking to run out, that there's a lot of interest locally to do it. However, I think that because of the wider environment of Australia, the timeframes and the points of view that they take when it comes to crafting regulation differ to what we've seen from Singapore. And then, so the concern would be that somehow we let our crown slip because we don't, that we become a little bit too short-term perhaps, and perhaps a little bit too reactionary to outside factors rather than take into account the full picture. And it's also as much to do with the fact that the Singapore government are trying out so many other different proof of concepts themselves. Like they seem very keen to have a hand and in a way shape the direction from their involvement in these different projects. And my hope is that we see Australia try and do the same, because obviously Treasury being so key in all of this, both on both sides of the fence in terms of shaping of regulation and then enacting and playing it out with the wider industry. That would be my view anyway.
Do you think there'll be a likelihood of, say, Singaporean-based institutional custody service providers extending across the little pond to Australia, and would that be a viable business approach?
Yeah, I think so. I see no reason why not. I mean, there's the regulatory agreement between Singapore and Australia in terms of recognizing each other's licenses and so on. So if you get licensed in Singapore, you've got a good chance of getting that recognized here, and likewise in return. So if you do have a tech company that's set up in Singapore that can meet their stringent requirements, you can certainly hop across the pond to here and over to New Zealand as well, likewise, to take that technology with them. I think too that what we'll see with custodians, if I may, from that point of view, is I don't think it'll be all our eggs in a single basket. I think that the industry will be like, I remember back pre-GFC, where as far as in prime brokerage, and your fund tended to have one major prime broker and then a second PB, maybe a second PB, and then GFC happened, and then suddenly everyone's like, crap, we've got to really spread the risk across lots of different investment banks, and so you'd have a number of different prime brokers. And I suspect that we'll probably see something similar happen with our custody solutions, that we won't keep all our eggs in one basket. We'll work across a few, which is a really good thing from a risk mitigation point of view, but also a really good thing about supporting as many different platforms, that have viable solutions as possible. So it's a good thing.
Providers are easy to navigate, which may not be always the case right now.
What about the UI UX?
Yeah, but I think that's where there's actually tremendous opportunities, right? So the silver lining from all of this is that certainly from an investment point of view, we see some tremendous opportunities in the custody space, or just third-party intermediaries. So we're talking about, blockchain cryptos is supposed to be about decentralization, but actually to safeguard against some human nature tendencies where there is extreme centralization going on, you do need that third-party governance, custodian, third-party checks and balances. And that's actually an area, if I might share, is an area that Sapien and a few of our partner funds are actively looking at, a crypto custodianship. There's still a lot of opportunity for room for improvement there, cross-border opportunities, spreading risk, so more portfolio managed risk, balanced way of managing crypto assets. And this is something that certainly we as an investment firm are actively looking at on the back of this. And so every crisis brings on a new wave of opportunities, and this could be one of those things. And I see both of you nodding violently with that. So on that note, any last pointers on before we wrap on other business opportunities or investment opportunities that you can see from each of your perspectives over the next 6 to 12 months on the back of recent events?
I don't know if I'd say the next 6 to 12 months, but one thing I did find really exciting on the back of that JP Morgan announcement, moving into decentralized finance, is verified credentials on chain through the W3C. You're familiar with this, Victor? That to me was really exciting. And being able to transfer and have control over your ID, particularly sitting here in Australia after the debacle with Medibank and Telstra, the big telcos, where they had the hack, like all these different hacks that people have around your identity. And
we really went through a major wave of hacks as a country, didn't we?
Yeah,
Yeah.
so now there's this opportunity with verified credentials where you retain ownership and control of your credentials. You get to show the third party, they get to agree, they accept and understand this as your KYC AML documentation, and then you pull it back and you keep control. And that's exactly how it should be. It's your documentation, your information. You should have full control over it. But because of where the technology was for so long, that wasn't the case. Whereas now we have a situation where that doesn't have to always be the way. And I think that to me is something that's really interesting. Overall, I'm incredibly positive about the space. That doesn't change. We're going through the peaks and troughs of a business cycle, exacerbated by what we've seen with FTX, fair enough. But the overall integrity of the business, the sector that we're in is still really, really exciting to me. Amy Rose, what do you reckon?
Oh, look, that one of the things I am excited about is the need to be a custodian of everything, not just your crypto, but your IT, all of your documentation, all of your property, everything. And that's what we're going to see coming in. And Victor, more to your point, Australia does have an outward looking view. Our regulators do, they look internationally. And I think what will happen is there's already a skill shortage, there's talent shortage. We don't have enough human resources in Australia to tackle what's coming for our or any industry in technology. So we will be looking probably to Singapore. That friendliness is a perfect environment for us. On a positive note as well, I think the investment now that we're going to have that after 6 months, 12 months, whatever, that will flow in more so than it ever has. There's been this apprehension from investors in the industry where they're just that there's not enough regulation yet. We're not going to invest as much as we would overseas because we don't have that clear picture. So I'm really excited about that. Obviously, like I said, there is a chance that it might be over-regulated, but if done correctly, which we have an opportunity to do, I think we have a really beautiful future ahead of us.
A whole new wave of new people getting into the sector, right?
Yeah. That trust and transparency is essential, though.
On that very positive note, I think thank you very much to you both for your excellent insights and sharing. And I'd like to pass back to Karim now.
Thank you, Caroline, Amy, and Victor. That was actually very insightful. What was interesting for the few last closing comments you made, actually, we just had today the panel 2 or 3 panels ago with Carrie Lee Miller and Rhett Bauer and Corey Heimel. We're talking about the future of work and what that means and the difference of necessity of Web3 talent. There's a huge short gap, and it's in the trillions of dollars worth of difference. And that's really interesting to hear when you look at the statistics there. So that video will be up in a couple of days, by the weekend at least. And then earlier on in the day, we had a conversation with Amit Pradhan and Greg Kidd, and we were talking about identity and DeFi and how that is coming together. And strangely, we started talking about self-sovereign identity with Dele a year ago, and that's coming back more strongly now. So what's really interesting is we pay attention to some of the innovators in the industry that are taking all of these considerations, whether it's security, blockchain development, crypto, future of work, and we start to piece this jigsaw puzzle together, we can start to see where the gaps are and where we can start putting these things together to make a more efficient and cohesive environment. So there's a lot that we've seen over the last year that people have been thinking about. And that's why I love the GIC thing, is because we just get speakers from all over the world and just start to understand what the temperament is globally of what's happening, which is great. And then your addition to what you're seeing in Australia is pretty amazing. I don't know if the poll was up on this session or the earlier session, but just FYI, with the FTX fallout, one of the polls that we heard was, hey, is this changing or affecting your investment decisions? And surprisingly, the answer was 50-50, right? It's not like, I'm never going to do this. It was like, oh, no. Some people said never, and half of them said, no, it doesn't. And so when you reflect back on the reasons of the failure, like Victor pointed out earlier, it's not about the technology or about the future, that was surely just an oversight and management and just exuberance by the investors that didn't pay enough attention to the details that we should, like both Amy, Caroline, and Victor, you're doing today with more gusto than perhaps other companies did over the last few years. So that's really interesting when you start to put these pieces together.
There could be a very exciting new wave if suitable controls and governance measures, whether it's custodian or more decentralized authentication, as well as some, let's say, fit for purpose regulation, to Amy's point. I think that could really unleash a new wave of investors that were previously too hesitant, too fearful to come into the sector, right?
Yeah.
And to invest overseas or cross borders. And some of my recent visits in the last few days here in Vietnam is a testament to that. I mean, we're out of time today, but love to share, going forward in perhaps future sessions on what's happening in Southeast Asia in this space. And
yeah,
it's changing every week, let's just say.
Yeah, and if we put things into perspective, the percentage of people who are involved in the industries that we're seeing that has bad or negative press today, the percentage globally is very, very small, right? Yeah. I mean, you've got a whole bunch of people who have lost money. Yes, that's sad. But then you've got a whole larger population in various other nations outside of North America, Australia perhaps, that are using these technologies in ways that are enabling better lives, better commerce, better infrastructure, just because the technology is actually good for it. So if we are able to parse out the differences of the bad news talking heads and the utility and efficacy of what we're doing, it changes the perceptive, right? The perception or viewpoint rather than point of view.